I'm getting asked all the time right now, is the market crashing? And so in this month's edition of What's Up or Down with the Market, we're going to cover that right now. My name's Dennis. I'm with the Dennis Tuttle Real Estate team, and I want to spend some time just talking about what's going on with the market. So people are asking, is the market crashing? And my simple answer is no, at least we don't think so. And we're going to look at a couple indicators that would indicate kind of where we are, because if we look at the news and we look at what people are saying on social media, we're going to have this decision about the market based on emotion or based on fear. But when you look at the numbers, it takes all the emotion out of it, and now we can actually make a good judgment call on what's happening right now. So the first number I want to look at is going to be inventory. And inventory shows the rate that we're moving through the current supply of homes. Right now, we've got about 25,000 homes on the market, which is about 2.6 months supply of homes. However, it's important to know that inventory is what drives if we're in a seller's market or a buyer's market. So a buyer's market is anything that's 6 months or higher, and a seller's market is 5 months or less. So at 2.6 months, we are still in a seller's market. In fact, if you go back to pre-COVID, 2019, we were topping out around 4.4 months supply of homes. And so at 2.6, we're not even back to where we were pre-COVID, pre-2020. And so, but it does feel like this. I mean, inventory is up like 136%. So when you're up anything 136%, you're going to feel it. And so what's happened is we're going 100 miles an hour down the highway, and then all of a sudden we slam on the brakes down to 50. Well, 50 is still faster than walking, but at the same time, it doesn't feel like 100. So we're feeling that difference, yet when you look at the actual numbers, it's not that bad. In fact, what happened was in June and July, May, those were record months in 2022 for listings taken. We were listing almost 20,000 homes a month when the interest rate started going up. And I call that kind of the FOMO crowd of listings. Those were the people that heard that the market's crashing or the interest rates are going up, so we need to get our house on the market. And unfortunately, they were too late. Compare that to a record month of 17,000 listings. So the most we'd ever listed before was 17,000. Then all of a sudden we're listing 20,000 a month. Well, inventory grew from about 2 to 4 weeks supply to 2.5 in June and July of 2022. The crazy thing is it's pretty much not moved. It has stayed at 2.5 months for the last 7 months. So it tells me that homes are still selling. We're not continuing to grow. And I was talking to my team and I was like, look, at the end of the day, like if this keeps going, we're gonna be at 6 months inventory by the end of the year. And yet it didn't. It just kind of plateaued, and we're still trudging through all these listings that came on the market in fear of the market changing and things slowing down and whatnot. So the other thing that I want us to look at today is pricing. So prices are actually up year over year, 4.9%. The median home price is $361,000. Now, the interesting thing with home prices is you're hearing a lot of news and media about month over month numbers, like prices are dropping. But I want you to see this real quick. Prices peak and valley every year. They start low in January, peak in June or July, and then back down in December. And so you can look at any year and you're going to see prices peak and valley. The question is going to be, are the prices the next 6 months? We had a very sharp incline these last 2 years during the summer. Are we going to have the same sharp inclines this year? So really a year over year comparison is the only fair comparison. And when you look at year over year, we're up 4.9%. December over December. So we're still up. In fact, we're up almost $100,000 from where we were 2 years ago on average sales price. And so it's going to take a lot to see a really big correction. Now, if things slow down, yes. But are things crashing? No. In fact, interest rates have come down to the low sixes. We were in the mid sevens when things were going crazy going into the fourth quarter. So that's another reason we're seeing less sales month over month. We're also seeing less sales. If you're hearing about that, well, yes, there's less homes that are selling. Well, there was also about 11% less listings on the market in December. Sales were down about 30%. However, we also have seen a big pullback in institutional buyers like Open Door, OfferPad, some of these companies. And with them not buying as much in the market, that's taking more time for us to sell listings to actual homeowners and individual investors. So lots to take in there. However, just wanted to give you a quick update. Based on all those things, the ingredients are still really good for a strong year. And I think we're going to have a great real estate market ahead of us. We are obviously proceeding with caution. We run numbers on anything that we're buying, anything that we're selling for people. However, homes are still selling despite what you might be hearing, and they're selling actually at a pretty good pace. And so if you have any questions on that, feel free to reach out to myself, to my team. We'll be back next month with another What's Up or Down with the Market. And until then, we'll see you later. Hope you have a great day.